Wall Street closed mostly flat last night, but the futures market told a completely different story after the bell. Nasdaq futures surged 1.4%, S&P futures gained 0.54%, and Dow futures added 0.51%. This points to a significant rebound in risk appetite when Asian markets opened today. Looking at individual stocks, Nvidia slipped 0.66% to $190.01. The QQQ ETF fell 0.65% to $661.73. Mega-cap tech names remain under pressure from the recent sell-off, but the synchronized move higher in futures suggests that expectations for a bounce are building. Bitcoin edged back above $64,800, and the ARK Innovation Fund managed a tiny gain of 0.04%, indicating that growth stocks are starting to stabilize. The VIX Volatility Index closed at 18.89 yesterday, dropping sharply by 8.57% in a single session. That is a substantial move. We checked our data and found no single triggering event. The VIX is still within the normal range of 15 to 25, but the rapid decline signals that market sentiment is transitioning from panic repair to a more neutral to optimistic stance. On the policy front, the U.S. Trade Representative has extended tariff exemptions on roughly 350 Chinese goods through the end of 2026. These cover semiconductor manufacturing equipment and medical supplies. This directly benefits Chinese companies that export these products to the United States. However, the Commerce Department also added 5 Chinese entities to the export control list, targeting quantum computing and chip packaging. Those sectors will face near-term headwinds. Looking at the global macro picture, the 10-year Treasury yield rose to 4.68%, but markets did not panic. The move higher in yields reflects money rotating out of safe haven bonds into risk assets. The dollar index continues to weaken, falling to 100.69. That is positive for emerging market assets. Crude oil dropped nearly 2%, while gold edged higher, but its safe haven appeal is fading at the margin. Signals are now pointing in the same direction. Money is leaving defensive assets and moving into risk assets. The yuan is strengthening clearly. Both onshore and offshore dollar-yuan pairs have broken below the 6.75 level. This reduces currency conversion costs for foreign investors and provides a positive tailwind for northbound flows into a shares. We expect Chinese markets to open higher today, driven by the rally in U.S. futures, a weaker dollar, the VIX panic release, and a stronger yuan. Looking at the A-share market specifically, yesterday saw extreme structural divergence. The Shanghai 50 index actually rose, but the Chi-Next board plunged nearly 4%. Today, the Shanghai Composite is likely to trade in a mix to higher range, while the Chi-Next may stage a technical bounce. The most active sector should be semiconductor equipment and materials, driven by the tariff exemption extension and the return of growth-style risk appetite. Medical supplies and consumables will also benefit, but with less upside elasticity than semiconductors. Investors should avoid quantum computing and chip packaging stocks, as the entity list escalation directly pressures these names and capital will continue to flee these policy-exposed and technically weak positions. Northbound flows are likely to be net positive today. On individual stocks, Avantor, a supplier of high-purity chemicals for wafer fabrication, is worth watching but only after a pullback to its 5-day moving average. Indium phosphide substrate stocks and high-voltage transformer names look relatively resilient and can be held. But avoid POET, Coherent, and AXT. These stocks have all dropped between 38 and 49% over the past month, broken below their 200-day moving averages, and face high policy risk or fundamental deterioration. We recommend exiting these positions immediately. Here is our core call for today. The VIX crash combined with a weaker dollar and extended tariff exemptions has opened a risk-on window. Semiconductor equipment will lead the A-share market recovery. Our probability assessment is 60% for an up day, 30% for a sideways day, and 10% for a down day.